Hello, everyone, and welcome back to another episode of Journey to Financial Freedom. I know it's been a while, but like many of you long-term investors out there, I'm sure you did not watch your portfolios too closely this past week. It was best to just turn off your stock apps and look away. In this video, I'll be talking about the market decline that we kind of saw. It was just a bit of a correction. It seemed today that we saw a lot of green in the stock market, so it did pull back a little bit, but I'll be talking about that as well as my portfolio and a change to strategy. And then at the end, I'll be going over VVPR's earnings. Taking a look at the S&P 500 as well as the Nasdaq for the past month, you can see there was a bit of a correction. This article here shows stocks such as Apple, Amazon, as well as Nvidia had all dropped over the past month. A lot of tech companies were getting hammered in the past few weeks and even throughout the past month, entering correction territory. I think this article sums it up nicely. So pretty much investors will be becoming worried that the reopening of many of the world's largest economies will lead to a spike in prices as people rush out. They're going to want to go to restaurants, go on vacations, and travel. And people are expecting that this could lead for central banks to hike rates much sooner than initially anticipated. So why did this affect the tech companies? We know that they were able to achieve record growth at such low interest rates that we've seen recently. So as the rates are expected to increase, it'll be harder for them to access the capital they need to keep growing at these fast rates. This article here actually just came out recently. It talks more on the inflation concerns and how it will impact rates. CEO of the Royal Bank of Canada had stated that he thinks inflationary pressures will force central banks to start raising the interest rates as soon as next year, so 2022. RBC's CEO also stated that he thinks throughout the second half of 21, the combination of the vaccine as well as stimulus programs throughout many countries will lead to strong economic growth. And recovery will be strongest in the sectors that were hit the hardest by COVID-19. So think food, hospitality, and all these things that will be opening up back again, as well as travel. The CEO, McKay, said that there is a challenge with central bank policy that will have to be addressed within 2022, especially within the late half of 22, ongoing into 2023 and 2024, due to the rate increases that are being forecasted. So all of this had led to a lot of fear in the market, and there was a huge sell-off as we all saw. NEO, which is one of my biggest holdings, we could just take a look at the chart, the 1 month chart here. The stock was down significantly throughout that time. And I know that I have this portfolio here that I show you guys. I opened this up for the YouTube channel, but I also do have my own personal portfolio with a lot more money. And I do have to admit, it was scary to see the portfolio down tens of thousands of dollars. And before we go over the portfolio, I thought I would talk about the new strategy that I came up with throughout the past couple of weeks. Now, for those of you who have been following this series and this channel for a while, you know that as soon as I get the cash in the portfolio, pretty much I will just add to my position that day. I don't have much patience with cash sitting there, and this is something that really held me back when the stock market had sort of had a correction these past couple weeks. Due to my continuous buying and lack of cash in my accounts, I felt as I was sitting on the sideline as a lot of people were jumping into all these shares at low prices due to the correction. I don't ever want this to happen again where I have no cash and I'm not able to add to my position, so I've made a new rule that I'm going to follow for this portfolio. What I'm going to do is, as I add capital to the account, I'm only going to spend up to 40% of that at the time. Each deposit, so let's say I deposit $100, I'll only add $40 to existing shares and then hold the rest as cash. That way I'll be able to build a larger cash balance. And if we ever see a correction like this or some shares drop to a low price, which I find attractive, I'll be able to add to my positions. I can give a few examples from this portfolio. First of all, Sol, you know, that has been one of my best positions I've had in this portfolio. It was impacted significantly from this market correction, dropping to prices in the $8 range. And although I initially purchased into Sol at around $4 or $5, this would raise my average cost. But I think that $8 was a steal for this company, as we've seen highs of over $20 within the past 4 months. So adding to $8 would have been a no-brainer if I had the cash available. Kraken Robotics and Deep Yellow had both also pulled back at the time, which I would have loved to add to those positions as well. So I have two new positions at the bottom here. They just happen to be a part of the same exchange. Greenlane Renewables, this is a company that I've actually made videos about before on the channel. I hold it in another portfolio, but it dropped to such a low price that I just had to get it. It was perfect price for me to buy in this portfolio. I'd love to keep adding if I have the cash available, given that I'm following the 40% rule though. And UEX Corp is another uranium company. This was suggested to me by the other analyst here at the TechniMentalist, and I did my own due diligence, as I always am recommending to you guys. This seemed like an attractive investment for me, so I purchased into this. I don't think I'll do a full review on UEX Corp, as we have so many uranium stocks that we've talked about on this channel, but those are the two new positions for my portfolio. Another thing I wanted to mention with this correction is I don't want to be the channel that's always showing off my winners and hiding my losers. So for those of you that have been following for a while, you know that this balance here has reached as high as $9,000, and I just want to show you that I'm keeping it open, keeping it honest with you guys. You can see that this portfolio had a huge decline here, and I just wanted to show you that that was the perfect time for me to buy. It was hard to see the portfolio down that much, as we've all seen, it has been over 100% total return in the past. So it was hard, but I think it was a perfect chance to just take a break from the stocks, maybe add to my positions, and it actually taught me to remain patient with this portfolio as well as my other portfolios. So there was lessons learned from this correction. Let's take a look at VVPR's half one overview provided by Alpha Street. This article was tweeted out by VVPR today after Alpha Street did an interview with the CEO of the company. VivoPower's earnings for the first half of their 2021 year were significantly affected by COVID-19 restrictions within Australia. For those of you that don't know, Australia has some very strict restrictions and interstate travel wasn't even allowed. This significantly impacted VivoPower's earnings for the half, with a 28% revenue decline, and the company also reported a loss of 0.38 million versus net profit for the half a year ago. Critical Power Services, which is one of the largest revenue providers for VVPR, was down 29%, while solar development was down 23%. We haven't quite yet seen too many revenues or sales from the EV, as we know they just fully purchased Tembo recently, but we know that VVPR has signed a $250 million contract for Tembo EV, which will be over the next 4 years. Some positives from the half include the strengthening of the balance sheet through raising of equity, increasing the cash balance, and refinancing some debt at a longer term and lower interest rate. The company stated that they would like to diversify into software, so software surrounding sustainable energy solutions, and the CEO talked about Joe Biden's policies for sustainable energy as well as the EV industry, hinting that there have been advanced conversations with potential customers in the US for Tembo EVs. I will still be holding VVPR with a long position. I'm still very bullish on this company. As I've mentioned before in my full review on them, I like how they are well diversified and in all the right sustainable energy areas, as well as their EV acquisition of Tembo. I believe that COVID will be clearing up worldwide throughout 2021 and 2022, and as this is a long position, I will remain patient for that. That being said, I will keep a close eye on VVPR. I don't want them to keep reporting losses, and as restrictions clear up, I'd like to see how they are able to grow their revenues and increase their profitability. I'm excited to also see Tembo EV sales hit the income statement, and we'll keep my eye out for more announcements from Tembo EV. That does it for this episode. As always, make sure you are doing your own due diligence. This is not financial advice. I'm not qualified to give financial advice. It's my own personal opinion on why I make my investment decisions. If you haven't yet, make sure to go check us out on Twitter and Instagram. We're very active on there. Thank you, and this has been my journey to financial freedom.